Welcome back to this Money Control live stream. You're watching Closing Bell with me, Nandita Khemka. We've kind of snapped out of a 6 day gaining streak. In fact, it was a 200-point cut on the Nifty, ended near the low point of the day. Kind of dampened the sentiment after a 6 day run. But nevertheless, a second straight week of gains for the indices. In fact, the Nifty, gained in somewhere around a percent or thereabouts, since last Thursday. So yes, although today the mood was a little somber, but on a weekly basis, nothing really to complain. It's a 1% gain coming in on the headline indices. For today's price action, the broader end of the markets were faring much better compared to the headline indices, but still, the mid cap index as well ended the day in the red. Taking a look at the sectors, I want to mention the Nifty Bank Index hasn't really been able to fire up in the last 6 days as well. This has been a rank underperformer if you compare it with other sectors like auto, FMCG, even in comparison with Nifty, the Nifty Bank Index has relatively underperformed. In fact, today it slid over a percent or so. The Nifty Bank Index has been trying to get past the 56,000 mark in recent times, but hasn't really been able to do that. So yes, this is one end of the market that has remained under pressure, even though we've seen a good up move coming in on the market of the last 6 sessions or so. But in terms of the broader markets, the market breadth today, it was skewed in favor of laggards. So the NSE advance decline ratio was almost 2 is to 3. Aside of banks, FMCG, IT, metals, all these pockets were under selling pressure today. But pharma managed to gain for a second day on the trot. But if you look at the weekly action, Maruti, and other auto names have dominated the gainers list, for the week. And even FMCG names have dominated the list of gainers for the week. For today, in particular, the gainers list was very slim. It had the likes of M&M, Maruti, Bharti, Airtel, Titan, Bharat Electronics as well. On the flip side, if you look at the laggards, Asian Paints, Grasim, Adani Enterprises, Ultratech Cement, Hero Motocorp, these were among the laggards. But let's take stock of the weekly performers as well. As I was mentioning, Maruti, etc., are on the gainers list for the week. Maruti, week change 10%. Nestle 6.5 to 7%. You had Hero Motocorp, although was an underperformer today, it's up 6% for the week. And Hindustan Unilever as well, it's up 6% for the week. Bajaj Auto, Bajaj Finance, M&M, Bharti Airtel, Titan, Tata Consumer, all of these stocks have gained in excess of 3% for the week. But what hasn't done well this week are the likes of ITC, Bharat Electronics, Coal India, L&T, Geo Financial, Power Grid, some IT names, HCL Tech, etc. But HDFC Bank, SBI, some banking names dominating the laggards list for the week. And in terms of some of the mid-cap movers, what deserves mention are stocks like Ola Electric that has managed to gain somewhere around 14% for the week. If you look at the weekly performance, you have a lot of other names as well that have done well, the likes of Paytm for that matter. But on a weekly basis, some stocks that haven't really been able to do well are the likes of BSC and Angel One. And the reason, of course, is pretty much obvious. It's the fact that SEBI is mulling longer tenure for equity derivatives, and that would mean weekly expiries may stop. So that's the trigger, and which is why BSC, Angel One are all the stocks that are among the laggards for the week. Before I get on board my guest for today, here's a message for our viewers. If financial freedom is your goal, Super Pro is your superpower. Get live trading and investment ideas from SEBI registered experts, pre-identified chart patterns, and AI-powered stock alerts on WhatsApp, all in one. And right now, we have a very good discount going on with our special financial freedom offer, where you can get the annual plan for just 2,499 rupees, down from 7,499 rupees. So what are you waiting for? You should just go and download the Money Control app and subscribe today. Well, on that note, let me bring on board our guest for today. Joining me is Nilesh Jain of Centrum Broking. Nilesh, good rally coming in over the last week or so, 6 straight day of gains. Today, of course, we managed to snap out of that. But what would you say? Would you just call it some bit of fatigue, or would you say that now that we've seen a good rally coming in, we could see resistance around the 25,000 zone?
Very good afternoon, Nandita. You have rightly pointed out we have seen a good momentum in the previous week, in fact, in this week as well. But last couple of trading sessions, specifically today, we have seen a kind of selling pressure where the Nifty index slipped below its psychological mark of 25,000. Not only that, it also broke below its 50-day moving average, which is also exactly placed at 25,000. So now if we take the retracement of the entire fall, which started from the month of June and till the lows somewhere around 24,400 odd levels, if we take the retracement of this entire fall, then 61.8% retracement has already been achieved, which is placed at 25,160, which means that the next leg of rally will only be seen if Nifty breaks above 25,160 on the upside. And on the lower side, the Monday, in fact, this week started on a gap up note, so that gap area support is still placed at 24,650, 24,850 zone. So in the coming week, we have monthly FN expiry for the Nifty and Bank Nifty. It is important to see whether Nifty makes an attempt to fill that particular gap. If that happens, then definitely we are likely to see another 200 point fall from the current level. And on the contrary, if Nifty manages to defend 24,800 levels, then there are high possibility of a short covering rally on the upside, which will open further upside towards 25,000 to 25,150. So overall setup looks quite a bit of volatile, and the major cause of concern is coming from the Bank Nifty, which has been a laggard. After taking a pause in the previous week, once again this week it has resumed its downtrend. It has broken below all short-term moving averages. In fact, the important 100 DMA, which has already been taken off today, which is placed at 55,350 levels. So at current juncture, if it breaks below 55,000, then we are likely to witness another fall of 500 point from here, and downside will open up for 54,500 as well. So structure wise, kind of a sell on rise structure till the time it doesn't surpasses 56,000 level on the upside. So banks are avoid for the time being. There could be possibility of some bit of rebound in the Nifty, but Bank Nifty looks slightly on a weaker side.
All right, Bank Nifty looking slightly on the weaker side, but what about IT? It did see a very good up move one of these days, but kind of fizzled out. Also, Wipro is in news on the back of an acquisition that it will be making Herman DTS for $375 million. Of course, there are concerns on the margin front, given the fact that the company, the company that the IT major is acquiring hasn't had a very great run when it comes to margins, and even revenues have been flat over the last 3 years or so. In fact, some of the brokerages have maintained their faith in a stock like Wipro. Nomura has a buy call, target price at 310, and they pointed out that this acquisition may hurt EBIT margin by 50 basis points for FY26 or FY27 due to the integration costs. And HSBC, on the other hand, has a hold rating, target price at 260. It says that the recent strong deal wins does boost confidence of a recovery in the second half of FY26. But given the fact that whatever rebound we saw in IT names has been a bit patchy, how would you approach some of these frontline names? And if the frontline names don't excite you, what about the mid cap names like Coforge, Persistent, even Hexaware for that matter?
Right, Nanita. So we did saw a good start for the week for the IT stocks, and after a couple of days of gains, we have seen some bit of profit taking as well. But if you see on the weekly basis, this has been a second consecutive weeks of gain for the Nifty IT space. We may not see a V-shaped recovery, but yes, a gradual upmove is something that we are expecting in the Nifty IT stocks, specifically large cap counters, namely TCS, Infosys, and Wipro. Now coming to stock specific, see Wipro, it has a similar structure of what Nifty IT index has, and we are witnessing a gradual up move, or I would say a rebound from the lower levels. There could be possibility of a follow-up move to continue in the coming week towards the levels of 255 to 260. But again, it's not looking that promising on the chart as of now. So it's an avoid for the time being. But yes, mid-cap IT stocks are looking attractive given the kind of momentum we have seen, namely Coforge continues to remain our preferred bet. We are pretty bullish for this on this particular counter towards the levels of 1800 to 1850 on the upside. So with the stop loss below 1680, any dip at all, if at all you get in the range of 1720, 1730, that should be used as a buying opportunity. In the IT space, we are slightly bullish on mid cap and small cap IT.
Okay, preferred play would be mid and small caps and Coforge looking good on the charts. Let's talk about some of the defense names as well. We did see a lot of traction in names like DCX and smaller names, private ones, Apollo Microsystems, and you also had Idea Forge. All these stocks were upbeat, and on the other hand, you had Masdown Dock. That stock was down, given the fact that JP Morgan has come out with a very conservative report on this particular counter. They're saying that they are seeing further downside on this particular stock. In fact, the risk reward is still adverse despite the correction that the stock has already seen. They are underweight. Target price is at 2,468, which is 11% lower than yesterday's close price. Would you say that defense pack as a whole is losing its sheen? But what is it that you spotted when it comes to these smaller names like DCX and Apollo Micro, so to say?
Right, Nanita. So the bigger player like HAL, Mazgaon Dock, in fact, all these stocks are witnessing some bit of selling pressure. If you see the major structure which has turned slightly on a negative side, specifically stocks like Mazgaon Dock, where we have seen a high near about 3,700, and since then it has constantly forming a lower top and lower bottom formation. The only support I can see on the chart for this particular counter is placed at 2650. That's the 200 long-term moving average, and historically we have seen this stock has respected and defended its important support of 200 DMA. So 2650 should be the stop loss for the long position. A break below the same will open downside towards 2600, 2500 as well. So it's an avoid large players like HL, GRSC, Mazgaon Dock. But yes, stocks like Apollo, Idea Forge, in fact specifically Apollo is looking very strong on the chart. Today, we have seen a huge spurt in the volume as well as price action. The stock has hit a new record high. Structure wise, still looks strong for 250, 270 levels in the near term. But buy and decline should be the strategy. Stop loss should be placed below 210. Now, coming to Idea Forge, we are merely witnessing a pullback from the oversold territory. This pullback may extend further towards 550, 570 on the upside. So, with the stop loss below 465, yes, Idea Forge can also be added purely from a trading perspective.
Hmm. Okay. These smaller names, are worth a look, and of course, the larger ones are an avoid at the current juncture. That's the word then. But what about our systems? If you track this stock, good price and volume action on this particular stock as well. The company has acquired or will acquire Novigo Solutions for 400 crore rupees. I think it saw the biggest single day gains in almost 3 years since November 2022, and volumes were also pretty good. In fact, 70 lakh shares were traded vis-a-vis 20-day average of 30,000. And the stock, of course, has turned positive for the year as well. Uh, what are your thoughts on our systems? Any levels you'll watch out for here?
See, today we have seen a good price spurt, as you have rightly pointed out, one of the biggest spurt in the recent time. But not only that, if you see the volume attraction, looks like the highest volume ever for this particular counter, over 176 lakh volume can be seen. So overall, usually we see very less volume. It's quite illiquid counter. But looking at the today's move, looks like there could be possibility of a follow-up on the upside. But really, I'm not getting that kind of a confidence to initiate any long position at the current level. If somebody is already holding the long position, can keep a trailing stop loss at 420 and stay put is the advice. We may see a gradual upward towards 470, 480 once again, but not looking that attractive to take any sort of aggressive bet.
Okay, still, some kind of lack of confidence when it comes to a stock like our systems because it's usually illiquid in nature. But let's talk about some of the auto names because they've been dominating the gainers list for the week. A stock like Maruti has gained 11%. Hero, Bajaj, all of them have gained. Today, of course, it was a down day for the likes of Hero because, of course, there is likely to be a Nifty rejig and the announcement is likely post markets in the evening sometime, wherein Hero may be exiting Nifty. So perhaps some bit of overhang there. But Bajaj Auto managed to come off the day's low after the management said that it has overcome the global magnet supply challenge, and of course, Chetak deliveries have resumed ahead of plan and ahead of the upcoming festive season as well. That was a big overhang, and Rajiv Bajaj also spoke exclusively to CNBC TV 18, wherein he said that in August, of course, they were expecting zero EV, but now that supplies have started 3 weeks ago, they've started the deliveries of Chetak, and of course, they are geared up for the festive season as well. But talk about the strong rally because of the GST boost as well. What would be the play? Which are the stocks that are worth a look?
Well, Nanta, not only GST play, I would say the festive seasons have begun
Hmm.
and we are expecting good numbers, specifically sales number in the coming month from the auto space. So auto space from a short to medium term perspective looks strong on the chart. Earlier at the start of the week, we have seen a good multi-year breakout coming in the Nifty Auto Index itself. So we are pretty bullish in this particular space. Coming to stock specific within two-wheeler space, TVS Motor looks strong on the chart. It is constantly hitting a new record highs. 3350, 3400 kind of levels can be seen in the near term in TVS Motor, but buy and decline should be the strategy. The support is at 3200. And apart from that, counters like Maruti, Mahindra and Mahindra are also looking strong on the chart. In fact, majority of the auto names have hit a new record high. So yes, the undertone looks strong and buy and decline should be the strategy. The auto space likely to be in focus as far as short to medium term is concerned.
Okay, auto space, of course, in focus. Any thoughts on IndusInd Bank? Because it may exit Nifty, and of course, the stock has been stuck in a downtrend, amid all the news flow. Although things have started looking up, but still the stock hasn't really been able to stage a very meaningful recovery after the recovery that it made from 52-week lows of 646. Now it is pretty much stuck. So, any thoughts on IndusInd?
So structure wise looks extremely weak. The counter is trading well below its all long term and short term moving averages. In between, we did saw a strong pullback, but it has fizzled out and the momentum has been lost in this particular counter. It has started forming a lower top and lower bottom formation. Looks like it is heading towards 730, 700 kind of levels on the lower side. So it's an avoid taking any contract at current level and sell on rise kind of structure till the time it doesn't reclaim the levels of 850 on the upside. So it's an avoid and sell on rise should be the strategy.
Hmm. Okay, sell on rise. That's the strategy for IndusInd Bank. A couple of more names, the likes of Aditya Birla Fashion, your Poonawalla FinCorp. All these names will be exiting FNO very soon, right? But today, most of them were very upbeat. How would you look at them now?
See, exiting from Nifty will not have any, meaningful impact on this particular stock. Technically, looking at the structure of Poonawalla FinCorp, which is looking extremely strong, and the recent momentum we have seen in this particular counter as well, it is trading well above its all long-term and short-term moving averages, and it has formed a good base formation as well. So, looks like a good momentum play. 480, 500 kind of levels can be seen in the short run. The support is at 440. That should be the stop loss. And Poonawalla is a kind of buy and decline structure.
Hmm. Okay, Poonawalla buy on decline. That's the view. Talk about a Paytm as well, and also Zomato, entire new age basket, so to say. Paytm has had a very good run this week. It's up 10%. Zomato recently hit a record high. Swiggy had a good day today. So, any of these names catching your fancy?
Right, Nanita. So Paytm was in my radar as well as a buy recommendation. So just want to highlight this particular counter, in fact, has given a multi-year breakout for the first time after 2021. The stock surpassed 1250 levels on the upside. So looks like a momentum play, and this momentum is likely to extend further towards 1350, 1400 on the upside. Again, a good candidate of a buy and decline structure. It has already moved 10% in this week, and in the previous week as well we have seen a good momentum. So the risk and reward is not favorable at present level, but ideally one should buy if at all it falls below 1240, 1230 levels. That could be a good entry point. Keeping a stop loss below 1150, it's a positional buy for target price of 1350 to 1400. Apart from that, newest stock like Eternal, Swiggy, In this week, we have seen a good momentum, but in last couple of trading sessions, we have seen some bit of profit taking. I think this is giving a good opportunity. This kind of profit taking should be used as a buy and kind of opportunity to accumulate the stock at the lower level. Eternal has a very good structure and price target in term of short to medium term. I think it is likely to inch closer to 350 mark, and 300 should be the stop loss.
Hmm. Okay, good positional buy. Paytm and a good opportunity to get into names like Eternal on dips to accumulate. But talk about the BSE, the whole thing about weekly expiry set to go. UBS came out with a note where they are saying that they see high impact on profitability if weekly, expiries stop here on. And every 10% drop, according to UBS, in options premium average daily turnover can lead to, 6% profitability impact. 80 to 85% of revenues for BSE comes in from the option segment. Stock, of course, has been feeling the blues on a weekly basis. The stock is down 6-7%. Even the likes of Angel One have borne the brunt. How should one approach these stocks now?
See, exchange related stocks are, we have seen a good correction in the previous few trading sessions now on the back of strict rules that are getting formed. So looking at the overall texture of the BSE, this particular stock, it is still trading well above its long-term 200-day moving average. So I believe if at all you see any decline toward 2200, 2100, that can be a good entry point. This may have a short-term impact, but positionally from a longer-term perspective, the growth story is very much intact. So I think buy and decline structure again for BSE, it has to be in the portfolio from a longer term perspective. 2100 from a trading point of view should be the stop loss. And positionally, we are expecting a move once again towards 2800 to 3000.
Okay, that's the view on a BSC. One more pocket that I want to discuss is the health insurance space. The likes of ICICI Lombard, which was under pressure, New India Assurance as well. I think these stocks have been under pressure today. CNBC TV 18 reported exclusively that IRDAI may cap health insurance premium hikes here on. Of course, at the product and portfolio level, that's something that is being mulled, and they are looking to link health insurance premium hike to medical inflation. So this, of course, maybe will come as a setback for some of these general insurance names. I think because of this, we saw uh, a reaction coming in on these stocks. But how do you look at some of these insurance names, the likes of ICICI Lombard, New India Assurance, particularly the health basket?
All right, Nanta. So we have seen some bit of impact in today's trading session across all insurance stocks that you have pointed out. Not only that, counters like HDFC Life and SBI Life have also witnessed some bit of selling pressure today. But looking at from a positional perspective, a couple of stocks that are on our radar, and we believe the structure is looking positive from a positional point of view. Number one, HDFC Life. So we are bullish in this particular counter for upside target of 850, 900 from a position perspective, or let's say 3 to 6 month kind of time frame. From a very short term perspective, we believe that the pressure is likely to remain across all insurance counters. But yes, from a positional perspective, one stock that we are liking is HDFC Life. Apart from that, Star Health is another stock that is looking slightly on a positive side and could be a GST beneficiary as well. It has a very strong support at 425. So from a risk and reward perspective as well, looks attractive at present level. And we can expect a pullback move towards 470, 500 levels on the upside.
Hmm. Okay, that's about insurance. Since we're talking about GST beneficiaries, can't not talk about FMCG because last 2 days haven't been all that great. But Monday to Wednesday we saw a very good rally coming in on FMCG names. So anything from there that you like? Would you look at large caps, the likes of HUL, etc., or would you look at the mid-tier ones like Dabur Marico?
Definitely it has to be a large cap space as of now, because after a long, long time we have seen a big move of more than 6% in the week in the counters like HUL, Dabur, Marico. In fact, majority of the FMCG stocks. And looking at the kind of volatility in the market, the focus is certainly shifting toward defensive once again. So consumption space is likely to remain in focus. We are advising to accumulate the consumption space from a longer term perspective as well as from a trading point of view. HUL is definitely a preferred bet for 2700, 2800 from a near term perspective. 2570 should be the stop loss. And apart from that, counters like Godrej Consumer Product, this particular stock is also looking attractive at present level. Given the kind of underperformance we have seen in this particular stock, now I think it's time for this particular stock to move, and a move towards 1300 to 1350 can be seen from a near-term perspective. With a stop loss below 1200, Godrej Consumer Product is also buy.
Okay, that's the view on the FMCG space. But before I let you go, Nilesh, how are you positioned for next week? Because we have quite a few events. It's a truncated week, yes. 27th is a holiday, but 27th is when the tariff deadline expires, and we are staring at a 50% US tariff. We also have GDP data, we have FNO expiry, we have the Reliance Industries AGM as well. So it's going to be a heavy week, although it's a truncated one. How are you positioned? And any recommendations for the next week?
Yes, Nandita, it's an quite an eventful week in the coming week and truncated one as well. The major event continues to remain, that's the FN expiry. Given the kind of eventful week, we are advising to stay sector specific and stock specific, because the sector and the stocks that are unlikely to be impacted from tariff would be maybe FMCG could be one basket, auto could be another basket that has already witnessed a good momentum. It's a kind of a non-event, I would say, as far as tariff is concerned. There could be possibility of further increase in the deadline, or there has to be some bit of a resolution on that front. Now, coming to stock specific action, we are liking Uno Minda. This particular counter has given a good multi-month breakout today. And on the upside, we are expecting a further momentum to continue towards 1320, 1350 with a stop loss below 1220. Uno Minda is a buy. We have already seen a good breakaway gap in this particular counter. And we did mention about Paytm, that is also there in our recommended list. Any dip towards 1240, 1220 can be a good opportunity to buy Paytm, keeping a stop loss below 1185, and target comes somewhere around 1320 to 1350.
All right, keep all those sectors and stocks on your radar. With that, Nilesh would like to thank you for taking out time and joining in. Always appreciate you joining in for our shows, and I look forward to our next chat as well. Wishing you a very happy weekend.
Thank you, Nanita. Wish you the same.
Thank you. Well, on that note, we've come to the end of a closing bell. Of course, it was a down day today, but nevertheless, on a weekly basis, we've seen gains of somewhere around 1% or thereabouts on the index. Today, of course, there is the all-important speech by the US Federal Reserve Chairperson Jerome Powell. Of course, the street will be watching out for that. We'll be reacting to it on Monday. But yes, some bit of a clue as to where the interest rate trajectory in the US is headed. That's something that, of course, investors will be watching out for. And next week, as I mentioned, will be a truncated week, but heavy one in terms of events and news flow. So let's see whether we can resume the momentum that we have seen over the last 6 days. But with that, completely timed out. Thanks a lot for tuning in. But of course, stay tuned to Money Control for all your other news and updates. And we'll catch you with the markets on Monday morning. Thank you. Have a great weekend.